My name is Jean-Pierre Carcabal. Um, I work for Holborn, have been for a few years. I'm half French, half British. My mother's from London. I was born in London. My father is from the Basque country. And I have been advising British expatriates all around the world, especially in France, for many, many years. And I had a 10-year span as a director of a private bank, Barclays PLC in Biarritz, France, where I was dealing only with British expatriates. So I know the mistakes to avoid when you are in the UK and you become a French resident. As you know, something happened in 2017, which is called the Brexit, made everybody's job a bit more difficult. So the presentation is aiming at explaining to you what the French system is. I like to say that it's actually a tax haven if you know your way around it. It's pretty straightforward. It can seem a bit complex when you just move in France, but actually it's very straightforward. So I'll just share my screen because I've prepared a PowerPoint presentation, and it's a slide deck which basically introduces who we are. I've told you who I am. Who we are. Holborn Assets has been around 25, 26 years. Headquarters are in Dubai. We have offices. Sorry. So who we are? Yeah, we are an international financial service group. As I just said, we have offices all around the world, fully licensed. Every advisor is fully licensed, and we are fully independent, as opposed to some of our competitors. I was speaking earlier about the fact that I used to work for Barclays. At Barclays, we were not independent. We were only providing solutions within the Barclays range. We provide advice in the global finance, solutions for expats around the world. And also we like to be jargon free, make it simple. And also be like a doctor in financial services, to be able to ride journey with you in order to provide ongoing service, because the circumstances in life can change for the good, for the bad, and our job is to anticipate changes in life and help when they happen. So our services are quite range. Obviously, wealth management, financial planning. That's very important. The case of inheritance tax planning, we'll see later on that in France, inheritance tax can be very expensive. Retirement planning, obviously, for younger generations, you need to build up some savings. UK and international pension transfers, that has changed. No longer as easy as it used to be. Obviously, life and critical illness planning, and citizenship by investment. That's if you want to buy, I quote, second passport. Portugal is quite trendy, although they've changed some of the rules and regulations. You probably heard about Donald Trump's visa, the US. Mortgage, if you want to buy a property, we can arrange the purchase of the property and the mortgage. Head office in Dubai. So we have a very big presence in the Middle East, Spain. We have a very big office in South Africa, and we have a very big office. We have a very big cluster of offices in Hong Kong, Bangkok, Vietnam, Kuala Lumpur, Malaysia, Mauritius, and Australia. So that covers the whole world. We have about 2.4 billion under management and about 20,000 as a clients. So big operation. So in France, what you need to know is when in France, do as the French do. They don't like paying tax. So what I'm going to run through is what are the essentials as of this year, because it's time for filing. So you've got income tax in France, like in the UK. You have a high income tax on very high income. Unfortunately, you have the real estate wealth tax. We'll see the threshold in a moment. Movable property, that's if you bring your Ferraris or Lamborghinis or your Picasso when you move to France. UK pensions, this is a touchy subject at the moment because we can't do what you used to do. Inheritance tax, that's going to be quite important in this session because, as you may be aware, we are in France under civil law, Napoleon Code, and there is forced heirship. I'll come to that in a minute, but it's essential to understand what it means if you have assets and you haven't structured them properly. The inheritance tax bill can be used. And then I'll have a short explanation of taxes on traditional asset portfolios. That's the first important thing. If you meet only one of these criteria, you are deemed as tax resident for that given year. If you are tax resident in France, you're subject to income tax on your worldwide income. Very important. So I repeat, if you are within one of these three criterias, only one. Most of it is the first one, 183 days per calendar year. You are tax resident for that year, and you are subject to income tax on your worldwide income. By the way, residency should be confirmed with a qualified French tax advisor. So I am qualified in France under the FCA. I have certifications with the AMF, which is the Autorité des Marchés Financiers. So, and also there's a double tax treaty that is in place between France and the UK, which I know all the intricacies. Actually quite simple. So in France, for those who are lucky to be in France, apart from the great food, good weather, and everything else, we have possibly the best healthcare system in the world. The French always like to disagree with that. I travel a lot. I can tell you in France it is the best, but it comes to a cost. So, and I apologize again for acronyms, but in France, we love acronyms. Everybody has to pay one way or another his way into social security system, whether it's by an deduction at source from your employer or payment on your capital gains. The contributions on income total of 9.7. Just to let you know, the CSG was set up in 1993 at 1.1%. It was supposed to be only there for 1 year. It has not 1.1%, and it's been stable for the last years. Hopefully, will not increase. Okay, the income tax, like in the UK, scale rate ban. The main difference, as opposed to the UK, every foyer, we call that a foyer, so basically Mr. and Mrs. Smith file only one return. They deduct 10% of their gross income for that year and apply the scale rate. A foyer, so a household of two people, has two shares. So there's a calculation which basically divides your annual income by a very clever formula, which I won't go into detail today. But as you can see, most people, especially retirees, are in the third bracket, which is 30%. You have, unfortunately, for the very high earners, again, that was François Hollande in 2012 that said that that contribution was exceptional and only for 1 year, but it's not. So above what I've just said before, you have 3% between 250 and 500. By the way, all these figures are in euros. 4% between 5 and a million, and upwards 5 million, of a million, sorry, it's 4%. So that's annoying to say the least. So that is real estate. That includes all your real estate properties worldwide. But the good news is if you move to France, you'll be exempt in 5 years. The net value on real estate is value minus all improvements that you've made. So if you have a property which is worth 100 and you've made 30,000, 30%, sorry, improvements on the house, then you deduct that. So it's the net value, and it's calculated in June. You have a 30% discount on your main residence. So typically, if you have a main residence in a city like where I come from, Biarritz, difficult to find something nice under a million. A lot of British like to be in Dordogne or areas like that where you can find some nice properties for 300,000. If you buy a second property and as a buy to let or holiday home, then it's not very difficult to reach the 800,000 mark, especially the first bracket. 80% of the real estate wealth tax is paid by people who have between 800 and 1 million point three of net, again, net taxable equity. So it's annoying, but, sorry, excuse me. Oh, sorry. Excuse me. Sorry. Okay, I apologize. Made the wrong move. Go back to the slide before. So yes, a real estate wealth tax is annoying. And as you probably know, presidential elections next year. I don't see in any of the programs that it's going to be about. It should be, but I don't see it in any of the candidates that have actually lined up so far. Movable properties, that doesn't concern anyone. Only if you're an ultra high net worth individual and you bring along works of art, vehicles, very expensive, then they will apply a 31.4 capital gains tax, flat tax, which includes the social charges as well. But usually it's not relevant because most movable assets like Ferrari or whatever is a depreciating asset. Unless you have a Ferrari or Picasso, which is an appreciating asset, And most other movable properties are depreciating, and in this case, they're not subject to that. So I have to mention UK pension. That's a very big point. It used to be easy if you had defined benefit, defined contribution. Sorry, a pension pot in the UK to move it out into an overseas vehicle, which would allow for more freedom, more choice of investments. These days are gone because now there's an exit tax, which we call an emergency exit tax of 25%. So we can't do that anymore. You can still have, obviously, the 25% tax-free drawdown, and you can also move your pension into some other vehicles, which we call international SIP. Again, I'm very happy to explain to you what there are. And obviously, all these are overseen by the HMRC. It's not an easy ride, but it can be done. And sometimes we actually discourage people from doing it because of the costs involved and time it takes. It used to be 40% of my business. It's gone down to below 10, just to give you an example. That is the big one. Inheritance tax, and actually I'm specialist of French inheritance tax. This is how you would approach financial planning in France. You see the percentage. These are for children that are in direct line. There's no inheritance tax between spouses in France since 2007, and a law which was called La Loi TEPA, T-E-P-A. So the problem lies, I see it very, 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 very times, that you have what we call, and I hate this word, I'll quote, in French, for those who understand a bit of French, famille recomposée, horrible word, which is a family of parents who have had children from previous relationship. In that case, the inheritance tax is extremely expensive. It's usually in the region of 60 to 70% for an estate of $1 million. So you have to sell assets in order to pay the inheritance tax. All the accounts are frozen, and it's a nightmare. There is a go-to solution in France, because obviously our job is to make sure that you don't pay these high rates. Also, there is forced heirship in France, as I said earlier. So if you don't make good financial planning, and if you don't arrange anything, and if you have an estate of, say, $1 million, 50 goes to the wife, you have 2 children, 25, 25, and the children pay inheritance tax. In the UK, traditionally, when, say, I always have the husband die first. If the husband dies, surviving spouse gets the estate, then the children. In France, if you don't wrap your assets into the correct investment vehicle, and there's only one, you have forced heirship. In order to avoid that, we have in France what's called an assurance vie, which is nothing else than ISA on steroids, which allows you to put whatever you want inside the wrapper. It grows tax-free. It's very friendly in terms of capital gains. After 8 years, you pay more or less nothing. The inheritance tax is only 20% up to 800,000, and you have 153,000 exemption per kid on top of the tax-free allowance. So you have 3 kids, that's 100,000 per kid plus 153,000. So in that wrapper, assurance vie, you can easily be tax-free, and you can nominate beneficiaries. So you can have Mr. John Smith, his wife as beneficiary, then the kids. And by doing that, you avoid totally legally, obviously, the forced heirship, which otherwise, and I've just seen it so many times where no planning has been done, and people had to realize assets in order to pay the inheritance tax. Another thing which is very important with the assurance vie, so the acronym is AV, nothing else than the portfolio bond, so, or life insurance bond. It doesn't form part of your estate. So if something happens to you, the proceeds go straight to the beneficiary without going through probate. So in 3 weeks, the surviving beneficiaries, receive the proceeds. And if you had the same amount of money in stocks and bonds, it would be frozen until the estate is cleared and the IHT is paid for. So again, what in France do, like the French do, it's not rocket science. The only product that's used in France for that tax planning, and the effectiveness in not being in the estate, which is huge, um, is the go-to solution. Why is it so generous, you might ask? Very simple. Every French family has like 2, 3, 4 of these AVs, and the monies that are in these wrappers are actually used by the central bank, Caisse de dépôt consignation, to fund social housing, and are used also as a collateral when the Chinese lend us money. So although we have 3.2 billion, I don't know, so huge debt, what's in AV is about half of what we owe. Our signature is still very reliable on the money market. So if you watch the French news, very alarming. Oh, the debt is huge, this and that, but it's covered by the assets that are in this vehicle. So pretty disclaimer, I've said French income tax is complex. Yes, it should be reviewed with a qualified advisor. I am a qualified advisor, but it actually is not rocket science. It can be structured, and also can be portable, meaning you structure it as a French resident. And the solutions we usually offer are portable, meaning you can go back to the UK with it, which is great. Okay, there's just been one change. These are the changes on basically the flat tax that has been created by Emmanuel Macron, been increased this year. So if you remember the scale rate, if your income generates a rate which is less than 31.4, you're better off not going for that choice, but just putting the income of your asset portfolios sell during the year. This is when I come into the equation. I calculate whether you have an income of 20,000 as a retiree, you sell some shares, and suddenly you've gone up by 1 or 2 steps in the scale rate or the band rate. And in this case, the flat tax, which has been increased, 31.4% is better than the higher band rate. If you are below that, then we go for the band rate. This is my job um, to not a qualified tax accountant, so I'm not allowed to fill in the return for you, but I can actually assist you face to face or via video call, either on Teams or Zoom, and I know how to navigate through the complexity of the French tax revenue website, which is called impôt.gouv.fr. And if you have assets in other countries, you have to fill in a few forms, which I know by heart. I've been doing it for more than 20 years, and it takes me only 5 minutes. So if you struggle, just you'll see at the end there's my email, phone number. Just ping me, and I'll be more than happy to help. Last sentence of this presentation: in the French tax system, capital redemption bonds or life insurance policies must meet specific French criteria qualify for the deferred taxation and lower tax. Don't worry, all the companies that we work for qualify, obviously, because our solutions are French compliant and meet these criteria. But I have to tell you that if you go to a high street bank and just buy, I don't know, just buy off the shelf assurance product, might probably not qualify for portability back to the UK. It might not. So be very careful because French bankers have no idea of the UK market. They don't know. So you're much better talking to people like ourselves. We have a double-edged sword in the sense of being born in the UK, dealing with British resident in France. I know exactly what mistakes not to do. Sorry. Next slide. Okay, that's our slogan. And here you have my tax code. And now I'm more than ready to put that in the background. Take questions. Hi, what are the first steps to take for filing in a tax return? Well, it's very simple. You have to go onto the French tax website, which is impôt.gouv.fr, and create an account, meaning name, address, and then you'll be in, and then just follow the frame and input all the data. Anybody has any issues, remove this. Yeah, just flash the QR code or email me. I'm more than happy to help. Lawrence. Just very simple. What is not simple, once you are in the system for the first time, is finding the good documents. It's not user friendly at all. So I will recommend we get in touch. I can help you, and there's no charge for that. Thank you very much.